For some ideas, we're joined now by Michael Mullaney. He's portfolio manager at Fiduciary Trust. His firm has $9 billion in assets under management. Thank you so much for joining us, Mike. Appreciate it.
Thanks, Julie.
So first of all, let's talk about where stocks are going from here. Obviously, today we're treading water a little bit. We seem to have gotten over the grease hump, at least momentarily. But do you think that thread is out now, or do you think that's going to continue to put pressure on stocks?
We're seeing that stocks will most likely be choppy going on for the next probably 2 to 3 months. The reason being is that we don't have the luxury during this last pullback we saw last week that we did during the first one during January. January was supported because it was the beginning of earnings seasons, and the earnings season for the first quarter was really stellar. We've gone into that void period right now. Earnings season is essentially over, so we'll have no real information about the marketplace and about the underlying stocks probably until July.
Well, what about the economic data, though? I mean, the data that we have seen over the past couple of months has been largely constructive here in the U.S. Is that going to be enough of a catalyst?
It is. It's generally been constructive, but if you look at the recovery that we've had so far during this, after this recession of 2009, it's actually been somewhat subpar compared to history based upon how severe the recession was during 2009. So the last print that we have, and take a number 3.5, 3.6%, while good, is that we should be seeing numbers more in that 5 to 6% category right now, as compared to what we're seeing with these kind of low 3s to 4% type numbers. Part of the reason, obviously, is that we haven't seen a really robust turnaround of consumer spending yet, that being affected by the job situation, quite frankly.
Yeah, and Michael, I was going to bring that up because with that unemployment level still saying just below 10%, consumer discretionaries, we're fairly cautious here. The consumer, they're seeing these numbers, hearing these stories that we've been doing today about some CEOs making millions of dollars, yet we still have millions of Americans out of work, and they might be a little bit hesitant to open up their wallets right now.
We would absolutely agree with that, Mark. We think that it's premature to think you're going to get a rebound, most particularly in retail sales. We saw some weakness in the last reported number, and if you really break down as to who's doing the spending, it's still the upper bracket taxpayers that are doing the spending right now. It has not gravitated down towards the middle class, and so we think that the unemployment rate is going to be very sticky around that 10% level for probably an elongated period of time.
Hey, Mike, just quickly here, though, but you still see the Dow and the S&P gaining from here by year's end. So given some of the obstacles that you're talking about, how are we going to get to, say, 1250 in the S&P 500?
It'll come driven once again by earnings, and we do think that the earnings are going to continue to be robust from now towards the end of the year. The consensus estimates are for mid 20% numbers for the second and third quarter. We would concur with that, and then once again elevating up to about a 30% earnings growth level in the fourth quarter of this year. We're a little suspect of that number because most of that growth is coming from the finance sector, which we're not overly elated about. But we do think that earnings are going to continue to recover and support stock prices through year end.
Michael, could we get to some of your picks right now? Who do you like?
We're overweight still in consumer staples. A company we like there is PepsiCo. Primary driver for that is that while their carbonated beverages have been relatively soft in North America, they're making very good gains as far as their Frito-Lay division within, most particularly the emerging market area. And they're also doing some vertical integration by buying back their bottlers, which we think will be good as far as cost control is concerned. We're still overweight healthcare, once because it's a staple, but we're a little bit different in our healthcare stocks in that we're trying to find the low-cost providers within healthcare. Teva Pharmaceuticals is a name there, and Express Scripts.
Mike, I want to ask you about Teva in particular, because this is a company that is now trying to undertake the acquisition of Ratiopharm of Germany. It also recently hit a bit of a speed bump with a legal decision related to one of its drugs that's, ironically, because Teva's typically a generic drug maker, but it's facing competition for one of its drugs that's not a generic from generic drugs. It's a little bit confusing, but how concerned are you about some of these risks?
Not as much. We think that Teva's got great prospects. The reason being is, once again, generics are going to be part of the healthcare solution, not part of the problem. And they're about to embark on the whole new biological generic field, which they will be a leader in. So we think that's just going to open up another door for them.
Michael, in our last 30 seconds, I wanted to quickly ask you about gold, because we had been talking about that earlier today, settling at $12.29 today. Are you seeing some protection there?
Yeah, we are. We've got, on average, at least 2% in all our portfolios in gold as kind of an insurance policy and a hedge against macroeconomic stories that come up, because they've been, the shocks have been on more on the downside than the upside as far as the macroeconomic data coming through as of late. We would also probably warn that most likely volatility will remain relatively heightened over the next couple of months in kind of a choppy fashion.
Right.
And for the more aggressive accounts, the VIX ETN might be a relatively good holding in portfolios as well for another insurance policy.
Mike, could I ask you in about 10 seconds, you think gold is due for a breather right now?
Could be. If you look at the charts on it, it looks a little bit overextended right now, but the underlying trend as far as it's gaining new investors right now every day as we speak, as more and more people come on to the story. And with the demise of the Greek economy and the situation we went through this last week or so, it bodes well for gold as well going forward.
All right, Michael Mullaney, Fiduciary Trust, joining us from Boston. Always good to have you on. Thank you so much.